What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 7th, 2023. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, today we have hit a ceiling roughly around the 4075. Something expected today. I expected some sort of pump closer to 4100, as we are waiting in anticipation of Powell. Now, Powell is going to be a very pivotal moment here, as it's going to essentially lead into a lot of other very big events in the next coming weeks. And so we're going to get let off by Powell coming in tomorrow at 10 p.m. Eastern Standard Time, and he will be in front of the Senate, I believe, tomorrow. Then I believe he has the House on Wednesday. I'm not sure if he's at the Senate tomorrow or the House, but either way, whatever he's at tomorrow, he'll be at the other one on Wednesday as well at 10 a.m. Eastern Standard Time. But what the biggest takeaway there is that he is going to get grilled, essentially, about what his actions that he's currently taking, what he foresees happening. So he will be. We'll see if we get the Powell of old that is very hawkish. Now, we've had some reports that have come in that have shown some higher inflation, which could lead to a very high or a much higher than anticipated core on the next core, which we have next week. And so you can see how this can start getting pretty nasty. So as of right now, we want to see if he starts walking back any of his statements from the previous monetary policy, and see if he starts leaning more towards a 50-point basis move. Again, the last thing you want to do is, if you start pushing rates back up, you're going to cause panic. So that's the problem, and potentially why they only try to price in a 25-point basis move. We've seen that they're predicting now that or projecting that in September that we'll have a 5.5. But that being said, that's still another 25-point basis move we hadn't originally thought we were going to get. So anything that alludes to something outside of a higher rate other than 25, or essentially anything talking about potentially more than the next three. Now, it was originally, we're only supposed to get 25-point basis moves. Now we're going up to 3. So if it's anything more than that, it's going to be an issue. Now, the way Powell has handled this he's been very tactful on the way he's trying to handle this to not draw panic. So I expect him to be well composed for the most part, but it's not saying you don't know what to expect when you're in an open forum, especially when you're in front of the House and the Senate. They ask very, very detailed questions about things, and they'll continue to pound that question at you in different ways. They'll reword it and throw it back at you to try to make you crack, or to try to give up information that you're not currently giving. So if he does get very general about stuff, I'm sure those kind of questions will start cracking down pretty heavy. Now, we've seen Powell under pressure. I remember when this whole inflation thing first started kicking off, there were some times he was under a lot of pressure and his voice was cracking. But nonetheless, I think tomorrow or the next 2 days could potentially happen, especially if he at all again mentions, and he's well aware that if he mentions going back to a 50-point basis move, you're going to panic the market. That means the Fed doesn't have it under control, especially after coming off saying that no, he had it under control and there was some signs of disinflation, even though he tried to grease the skids by essentially saying that we still see other parts that are very sticky and it's not coming down. AKA, energy and housing. The housing industry aren't coming down. That inflation is still remaining very high. So again, the next 2 days are going to be very pivotal. You're going to have Powell at 10 a.m. Eastern Standard Time tomorrow and Wednesday. And then on top of Wednesday, you're going to have the Beige Book, what's going to give you insight into the next monetary policy. Then you're going to follow it up with non-farms on Friday. Then we're going to get the core. Next week is blackout period for the Fed. So you're going to hear a lot from the Fed after Powell speaks. going into Friday, and then next week is a blackout period for the Fed. So you won't hear anything from them, but you'll get the core, and then following that will be monetary policy. And after that, we roll into a new set of earnings. Not long after that, a couple of weeks after that, we'll start hitting, resetting the button on earnings, and then we'll start getting the bank in big tech again, and seeing how Q1 is playing out. So again, there's a lot of concern. Tesla, even one of the biggest corporations out there. Everybody knows Tesla. They've been doing very well given the circumstances, but they're continuing to drop the price of their cars, because this is something I've talked about in some of my other videos, not heavily, but I have mentioned it a couple different times about essentially the auto industry. Any mid to luxury vehicles, right, are falling. They're essentially sitting on the lot. Nobody can afford them because of the rates, and then also you have a lot of very cheap cars that people. There's still a high demand for that because people still need to get around. So people are trying to purchase the cheap cars, but the problem being is if people continue to get laid off, which we're seeing more layoffs each and every day, that people won't even that demand will die out soon as well. And so again, this is why it's very conflicting to have good employment numbers when people are working multiple jobs. So it makes it look like there's a lot of people employed when there's not, because that's just more fuel for the Fed to keep hammering it. Again, you have to understand, for us to get to phase 3 of rates, where the Fed start taking rates off, we have to be in a very, very bad situation. We have to be in essentially a pandemic, right? The pandemic, 2008 crash. That's when stuff started being changed, where rates started to come down. And essentially, that is where we're heading. Essentially, the Fed is guiding us straight into a recession, but it's a double-edged sword, because if you don't do that, the problem is inflation is going to run away. And then what are you going to do from that point? This is what happens. We have to understand that we haven't lived through a time where we've printed 40% of the money supply. You can't think we're just going to bounce right back from this. Yes, there's some things in place, like ChatGPT and AI have become very popular because of what's currently going on. So essentially, companies have been starting to heavily rely on AI. AI is great, but it's not going to take the place of everything. It's still too early for that. And so there's still a lot of guidance. Any kind of professionals out there are aware of that even it may help to some extent, but you still need the knowledge from a professional that's been in the field. So you're not going to be able to remove all those jobs, but it will help to some extent. So with that being said, again, we are in a very bad situation. At some point, Powell is going to have to say that rates are going to have to increase more than 25. And when that happens, that's when the market's going to fold. This happened back in, I believe it was 1979, right? They thought we had everything under control. They thought it was a soft landing. The story has been changed. You have to remember that too. This whole soft landing approach has been changed. And now it's called there's a no landing, whatever that means. It's going to get nasty. We are going into a recession either way you look at it. Inflation is sticky and still at a very high rate at 6.4. It hasn't come down nowhere near where it should be at. So with that being said, this puts us in a very peculiar spot moving forward. If Powell walks back any comments about a 50-point basis move, again, he's tried to be slick about it and say that it's always data dependent, but the market doesn't care about data dependent. It cares about, well, are you going to do a 50 or are you going to do a 25? Again, if he mentions anything at about a 50-point basis move, the market's going to crater because it's going against what he said on the last monetary policy. And again, this is what happened back roughly, I think it was 1979, when they thought they had inflation under control, and it wasn't. And then they had to raise rates up to, I believe it was 20% rates. Do we see that now? I don't know. We're living through a historical time where we've printed a huge amount of money. Again, I think you're going to have to pile on high rates, because as soon as rates are cut, we've noticed one thing I have noticed is as soon as you have to understand, these rates have a very delayed reaction. It takes months for you to actually see what happens when you apply these rates. And as soon as we started dialing back to a 50, dialing back to a 25-point basis move after a couple 75-point basis moves, the demand is starting to pick up in some sectors, and that's not a good sign. You're trying to kill demand so that inflation can come down. And so every time there's a slight step or a slight benefit in rates, people are jumping on it, and that's not a good sign. Now, there's a lot of mortgage applications have gone through, but that doesn't mean that they've processed all those mortgage applications either. And right now, rates are so high, so you've killed a lot of demand. But the problem is that there isn't that much supply yet. People aren't to the point yet where they're having to sell their homes. That may take a while for that to happen, but you are still looking at more layoffs. Again, layoffs are going to continue and supposed to get really, really bad. We still have they were projecting 1 million by the end of the year from where we're at just a month ago. So even if it's even 3/4 of that, right, you still have a lot of layoffs coming. And you have to be mindful of that. And people are working multiple jobs to try to stay on top of inflation, as wage gaps are huge. And there's no way you can, it has to make sense, right? Why would you leave the house if you're working essentially for free? And so that's where you're seeing a lot of disconnect. Then you got a huge generation workforce that's going into retirement on top of everything. So there's a lot of discrepancies in the numbers and a lot of misleading information on what's currently going on. So all that being said, we're going to be kicked off here tomorrow with that. We're going to get kicked off with what Powell has to say. So let's go ahead and look at it technical wise. Again, I don't see us breaking the 40.75 unless we have to understand that the market can move up just as easy as it can move down, depending on what Powell says. If it's just the generic Powell, as always, and he's going to come out and say it's data reliant, which I'm expecting him to do, I wouldn't be surprised if we continue to chop in this section for the week. Now, if the FOMC or if the beige book comes out and says 50-point basis move, there's a potential. If there's a potential of a 50-point basis move in that beige book mentioned, or more 25-point basis moves mentioned, the market's going to correct from there and start selling off. If it's saying no, we're good, we're sticking at 25, things are still looking bright in butterflies, and there's nothing wrong with the world, then we can potentially start trying to push up. But again, it depends on how these events play out. It depends what Powell says. It depends what's in the beige book. Non-farms, I'm not really concerned about non-farms. I think that number is very scrubbed anyway, so it really doesn't matter what comes out of the non-farms, in my opinion. My thing is you don't want it to be high. If it's high, that's just going to, again, fuel for the Fed to lay on higher rates or continue to add more 75 or 25-point basis moves. Because we have to understand that, yes, they may price in a couple more 25-point basis moves, but what if at some point the 25-point basis moves aren't making any more of an impact? Then they have to go to a 50, then they have to go to 75, right? So they have to be, and that's what Powell is trying to say. They have to be adjustable, but the market's not getting that they have to be adjustable. Because you said there was disinflation, the market's going to hold on disinflation. So again, this lower level here, I'm watching roughly that 40-20. You've noticed a lot of these levels we aren't playing exactly on the round numbers. We're playing like 25-point increments. So we're roughly playing in the 75, or I should say, this 50 points. So we're playing the 475 to the 40-25. And then we kind of been straight buttering this 4K mark, and then we go just to the 39.75, 39.50, 25 increments. The market's been kind of dropping and playing in these ranges. So, and again, if the things play out like I'm expecting that they could potentially play out as, I think this could be a really bloody month. And I think this may be the top of what you're seeing of this month. And that by the end of this month, we could potentially be seeing 3,800, just depending if everything goes bad, we could potentially be seeing a 3,800 by the end of the month. If there's mixed signals, if there's good and bad, then we might drop down a level. We might be just playing roughly around this 3,950, 3,900 mark until we get more clarification, which again will lead to another core. If we start getting more cores back to back to back, which I'm thinking could potentially happen with just 25-point basis moves, then that could draw a panic. Then you might sort of see some more selling at that point. But right now it is, again, very pivotal to what happens next week on the core. And that's also very heavily reliant on what their Fed is approach to what's going on. Again, if they mention 50-point basis move, a lot of them mentioned it in the last meeting. They wanted a 50-point basis move, and they only got a 25. So depending what Powell says, you're going to get other Fed members the rest of the week playing off of whatever he says. No, I was the one that voted 50-point basis move. That's where I stand. Bostic has been back and forth, 50-point basis move, 50-point basis move, and then he's been very vocal. And he's not a voting member anymore, but he still holds a lot of weight in whenever he talks. And maybe that's just because he's more influential with other Fed members. That's why they hold him. They weigh on his words quite a bit as well. So because the market may be believing what Bostic is saying, but not believing what Powell is saying, could be a strong possibility. Once Powell loses respect for what he's doing, right, the market's just going to start selling. And that's what I'm trying to say here, is that you don't want the market to lose hope in Powell. That's why he has to be very generic about what he says. And so we'll see how this, again, tomorrow. We may just, more than likely, I won't be surprised if we came down to the 40-20 tomorrow, or we just stay flat and we just play this range until we get Powell. Once we get Powell, we'll start getting answers. Again, the market's going to be very volatile, and we get them early in the morning. At 10 a.m., it's going to start the volatility. And again, it's going to go off of every word that he says. If he says something wrong, this thing will just start selling. Again, this man holds a lot of weight in his words, and when it comes to any kind of market, so you have to be mindful of that. So the dollar, again, still, there's nothing wrong with the dollar. The dollar is just playing range. It's waiting for the next event. Tomorrow is the next big event. The next 2 days, you'll have a brief pause period on Thursday. But again, then we have the jobless claims. So if everything starts going bad up to Thursday, the jobless claims, if it's bad, it's going to sell off even more. That's what I'm saying. This can lead to a very cascading effect where things can really start selling off very, very heavy, just depending on what is being said, what comes out of the beige book, what comes out of the jobless claims, what comes out of non-farms, and then you go into core, and if core is bad, just more fuel to the fire. And if we come in at a 50-point basis move, that's just the nail in the coffin to essentially make this whole month just completely bloody. So anyway, it could cause this dollar to finally break out of this 105.6 and making a new high. So that's one thing you need to be very mindful of. Bitcoin, again, it's taken a nasty dump the other day. We'll continue to watch this and see what happens here. But again, I expect if the market's going to dump, this is going to easily climb back down to 16K. If we get a lot of fuel, depending on how these things play out, again, it could easily break that and go down. If for whatever reason this happens to be that we don't have inflation under control, that is catalyst for us to make a new low. Again, it's all event driven. We have to wait and see what happens at the events, and that's going to guide us if we're going to go lower or not. Again, if all these events that I'm talking about, if they essentially run in parallel and they line up, this thing could get a lot of fuel to the downside. So you have to be very careful. And again, if there's panic in the market, it doesn't matter what market you're in, it's all going to sell. So just be mindful of that. So Bitcoin is no different. This thing will start selling off heavily. So Tesla, Tesla Investor Day was not great. This could have actually been the retest here that we had the other day, and now we're starting to get selling. So again, Tesla needs to hold the 184 if you want any hope in Tesla going back to all-time highs again. Otherwise, this thing's going to break. Your next support is at 166, and then you got a huge gap fill here down to roughly that 140. So even if things play bad, I'm expecting Tesla to be down here at 140. Beyond that, beyond 100, again, it depends on what's fueling everything to the downside. If we start finding out that we're jumping back to a 50-point basis move, again, tech is going to be hit very, very hard. And so I have NVIDIA. I've been bringing NVIDIA up a lot too because of that fact. Because it's been struggling. It cannot break this 240. It's just not going to happen. Today it tried and got pulled right back in, finished the day lower. Again, we get some bad news in the next couple of days. This thing's going to essentially break the 224, and then you're going to huge gap fill down here, support roughly around 207. Then this thing drops. Something I've been talking about. Huge parabolic move, no touch points come back. This thing needs to at least retrace 50%. So you're roughly looking at 178, if not lower. Again, really depending on what's fueling the downside. I don't see anything to the upside, so I'm not going to talk about the upside. There's nothing in my mind, again, unless Powell is going to bring hopium into the market tomorrow. If that does happen, you have to still keep that in mind. There's still a possibility that could run up, but the odds are not great at all. You've had a bunch of hot reports up to this point. I think the core is going to be worse than expected. At that point, Powell has to correct himself, and that's when the market's going to lose its shit. So just be mindful of that. So nonetheless, I mean, it could all still push up too. I mean, there's always a possibility. You have to go in with that mindset. What we play is chance, right? You want things to be, you want to have the best chance possible, and you only take position upon having that greater chance. Now, if you take any random guesses and on what it is, that's just gambling, right? And so what we do here is try to increase our chances to the best of our knowledge, and that's why we have risk management in place, because if we're wrong, then we're wrong and we're out. We're not sitting in hoping and praying. That's not what we do. What we do is we look at events and see what's driving this thing, because events drive the market. Algorithms will drive the market based off events. And so you have to be mindful of that. It's not a guessing game. The more guessing you take out of it, and try to, again, determine what your greatest chance is, then at that point you put on risk. Right now, it has been very iffy because we're very, very data dependent on what happens. We're very, very event driven right now. The market's always event driven, but right now more so because there's a lot of effects that can happen from either one, Powell saying something that walks something back. People lose trust in Powell, you're going to lose the market. And so you have to keep that in mind. So BA, again, is retesting essentially the 217, which leads me to believe that people are taking risk off of tech. People are putting risk back into value and back into financials, because that's what essentially held us up last year. And they're hoping that this thing could potentially break out. But again, if we really start saying recession, this thing could just start tanking just as bad. So again, it really needs to break out to essentially the 221. If it could break above this, then could potentially still see Boeing continue up. But again, you don't like this parabolic move. I'm going to keep referencing this nasty parabolic move, with at least a 50% retracement, at least down to the 170, and it hasn't done that. So again, I think if you're buying at this top, you're going to be in trouble. Again, not financial advice, but that's just my opinion, and it's take it for what it's worth. So JPM, again, same thing, can't break out. It's trying hard to break the 144, and it can't. Again, we need greater insight into the future that things will pivot, and right now, nothing is looking like it's going to pivot. You got hotter than expected inflation reports. You've got reports that have been revised multiple times to try to take out the important inflation, to make it look like it's okay. Again, not trying to drive panic. So I understand. You have to understand that, as a whole, you don't want to drive panic, because majority of the people, they can't not deal with stress. And so you don't want to cause panic, because then you lose control. You don't want to lose control, so you try to prevent panic by painting the picture that everything's okay. And then hopefully, with the hope of that, you get yourself out of the situation that you're in. So that's their perspective. You have to understand where they're coming from. So I keep emphasizing about Powell and what he says. He needs to be very careful about what he says over the next 2 days, as it can make this market crash if he has to walk back the fact that he has to go up to a 50-point basis move, because it would have been on him. Well, then why did you go to a 25-point basis move when you knew that inflation could creep back up, right? It's not the first time they've made that mistake, right? Transitory, maybe, right? That whole story about being transitory, it was a possibility. It could have been transitory, but it was just way too much going on for that to really be transitory, right? You did print 40% of the money. Nonetheless, there's big supply issues going on. And this is what happens. This is the tail end of what happens of pumping for 2 years because of all the money that's been printed. It's not saying at some point the money printer will turn back on. We just have to wait. We have to let demand die. Demand doesn't want to die, and that's the problem. When demand dies, is people are trying to jump in and, oh, I want to, people want to make tons of money out of what's currently going on. I completely understand that, but again, biggest thing being is that you have to let it die. It's not died yet. We've seen some major hits in the stock market, but it's not dead yet. You have to kill demand. There's nothing out there that's screaming headline news right now. When there's something out there that's screaming headline news, then that's when you buy. Right now, we don't have that. And so there's nothing that's scaring the market. And there's emergency bond buying keeping the market up to preventing panic. So all that being said, if you would be so kind to drop a thumbs up, we'll see what tomorrow brings. We'll see what Powell has to bring to the table, and we'll take it from there. So tomorrow will be interesting. We've got a lot of events. I'm excited. I hope you're excited. I get excited over this kind of stuff. So nonetheless, if you aren't excited about the markets as I am, then why are you in the markets? I mean, for real. But nonetheless, with all that being said, drop a thumbs up, and I'll see you guys on the next one.